Hello, my name is jovifoo and I am a licensed unit trust consultant. First of all, I would like to thank you for not throwing this away into the rubbish bin. This educational presentation is free of charge, no cost needed at all. All I need is just 20 minutes of your time. I hope that you will be able to learn something new in this presentation, which would prepare yourself for a better future. Feel free to share this video with your family, relatives, friends or neighbors if you feel that they are able to learn something new from this video. Investing, growing your money. Why is investing increasingly important in today's era? Why you should start investing as early as possible, and how can you start now? Actually, what is investing? From the dictionary, investing means to commit money in order to earn a financial return or to make use of for future benefits or advantages. I believe it is a combination of both, which means to invest is to commit money in order to earn a financial return for future benefits or advantages. In other words, using money to grow money. So, what are the investment methods available in the market? First of all, we have the active investment, which is the stock market investment and properties investment. This form of investment requires the investor to be proactive, which means doing research and analysis of property or shares. Some of us workaholics don't seem to find the time to do it. But don't worry, we have the passive investment, which comprises of fixed deposit investment, EPF, and unit trust investment. Passive investment means that you don't have to be an expert or have the time to invest. You can leave the analysis and research to the professionals. All you have to do is invest. Now, of course, the rate of return is highest in active investment, but in the passive investment category, unit trust investment ranks the highest in the rate of return as compared to EPF and fixed deposit investment. So now comes the question, why invest? We plan for our future. We invest so that we can execute our plan for the future. Have you really thought about your old age? Have you prepared yourself financially when you retire? Do you think that you can relieve the burden on your children during your old age? But don't worry, we have a few plans for you. The first being retirement planning, child education planning, and hedging against the inflation, which means trying to beat the inflation. Now I'm going to share why is it important to invest. Working beyond 55 years old. This is from the Star on August 25, 2012. This news states that many Malaysians are unprepared for retirement. An astonishing 92% of current retirees left the workforce only by 60 years old. They mentioned that EPF contribution is insufficient for their retirement plans. And this report on 26 August 2012 by Malaysia Chronicle states that there is an increasing vulnerability of Malaysians due to low rates of pension receipt under EPF and the lack of old age poverty floor. 4 out of 5 Malaysians worry about being poor and in need of money, becoming a burden to their children, and being in ill health with no one having to care for them. Most of them outlive their savings in 5 years' time when they are 60 years old. As you can see here from a report by the Edge newspaper on 3rd January 2012, this report states that Malaysians fret over financial preparedness in retirement. 94% of Malaysians believe that having enough money to live on during retirement is important. This is really good news. But are you taking action? Cost of overseas education. Have you thought about how much it will cost in the future? We all want our children to go to a good school so that they can get a prestigious degree and land a good job. Even better if overseas. But do you know that it is becoming more and more expensive to go overseas to study? This is a newspaper report in September 18, 2010. This report shows the rising cost of education, and it is expected to trend upwards in the future, which means getting increasingly expensive. This report also states that having investment is a good way to build up your child education fund. This way, parents do not feel the pressure and find that starting early will allow a smooth continuation of the funding over the years. This is an example of education costs in the future. Local universities will come up to around 156k ringgit, while overseas education will come up to around 510k ringgit in the future. And these are just for a general degree. There's already a double-story house in Klang Valley. In this news from the Star on June 2nd, 2012, it states that planning well for your children's education is important because of the rising costs in education. Most parents only think of the tertiary expenses, but forgot to take into consideration of other costs such as accommodation and pocket money. Inflation. Do you know how the inflation is affecting us every day? This is a newspaper clipping where it shows the difference between living in 1980 and 2012 due to inflation. Inflation is a term which means that there is a rise in the general level of prices of goods and services in an economy over a period of time. And that also means how much your 1 ringgit can buy in 1980 and 1 ringgit can buy today. Your money is actually losing its value. A double-story house costing 60,000 in 1970s is now 850,000 ringgit. We want our investment to be able to give a rate of return higher than the rate of inflation. This is some of the more common problems faced by the people today. You do not have enough time or a big enough capital for research and analysis to invest in shares of property. And you feel that you do not possess sufficient expertise to invest, but you also prefer a much safer way of investing. And you also know that you must invest, but you are undecided how. Then I believe unit trust can be a choice for you to invest, and I'm going to show you why. What is unit trust investment? It is an investment vehicle where the company pulls money from the public and invests in the stock market, the money market instrument, and bond market. This is the same as a group of people pooling money together so they can afford to buy a property for investment. But in unit trust investment, besides using your cash to invest, you can also use your EPF money to invest, and you can even invest every month. For EPF investment, instead of using account 2, which is for housing loan and computer, unit trust investment invests your EPF money from your account 1, which is untouchable until you are 55 years old. So no worries if you are planning to buy a house using EPF soon, because that is using account 2, while unit trust uses account 1. You can make all your money work hard for you at their potential best. Don't let your money get eroded by inflation. Like I mentioned before, I am a unit trust consultant for Public Mutual. This is just a short introduction about Public Mutual. Public Mutual is a wholly owned subsidiary company of Public Bank Berhad. We are also Malaysia's #1 unit trust management company among 82 other companies for 9 consecutive years. This is a performance index of our first unit trust fund since 1981. Just take a look at this graph. What does this mean? It means that if you were to invest since 1981 with Public Mutual, you would have gotten 800% in 31 years. What does this actually mean? This means that 100,000 ringgit can become 800,000 ringgit in 31 years. Okay, let's not talk about 30 years ago. Nasi lemak was also much cheaper back then, right? But let's talk about the last 10 years. The last 10 years have been a real roller coaster ride for everyone economically and politically. In 2001, we had the September 9 terrorist attack on the World Trade Center. Because of this, the US Dow Jones lost USD 1.4 trillion in just 7 days, affecting the worldwide market. And then the following year, we had the war against terrorism, which started in Afghanistan. But in the same year as well, we had the SARS pandemic, which caused 774 deaths worldwide. Then in 2003, the war against terrorism continues, but now in Iraq against Saddam Hussein. And the following year we have the tsunami, which killed nearly 230,000 people in 11 countries. Because of this, many economies have been affected. Then in 2008, the US was hit by the subprime mortgage crisis. As a result, 750 billion US dollars of debt had been wiped out. Then in 2009, we had the H1N1 pandemic, causing 1,462 deaths worldwide. And lastly, in 2010 until now, we have the Euro debt crisis. Iceland went down, Greece nearly, Spain in limbo. So, the market is not stable yet. So many bad news in these 10 years. If you want to invest during any of those times, any year in that decade would have told you it's not safe to go into the market. Am I right? The market is too volatile for you to invest. But what if you did invest in that period of 10 years with Public Mutual? In these two examples of fund by Public Mutual, we are able to generate 12.45% per annum and 14.15% per annum in the space of 10 years. So what does this mean in numbers? This means that an investment of 100,000 can come up to 323,000 and 375,000 respectively. Your initial 100,000 ringgit for your child's local university education fund can now be pushed up for their overseas university education fund. Now, imagine if you invested for their education from the moment they were born up to 20 years of age when they are ready for their tertiary education. Through my experience in this industry, there are many questions raised from investors to me. I've tried my best to answer these questions, and these are some of the most common ones being asked, and I would like to share it with you. The first being, is it risky? The answer is yes. Any investment is risky, but we reduce investors' risk by investing into various asset classes in different countries, in different sectors, and also in different companies. Some investors tells me that the market is uncertain and they do not want to invest now. Yes, the market is uncertain, and that's also why we are not able to time when the market will be stable again. But using the right strategy, ringgit cost averaging and long-term investment, there is no necessity to time the market, as proven by a chart I've shown of investing with Public Mutual in the last 10 years. So it's not about timing the market, but the earlier you invest the better, and I'm going to show you later why is it. Some investors tells me that they are happy with their EPF returns. But is EPF really enough? If you retire at 55, according to the average lifespan of Malaysian of 75, you have an approximately 20 years of work-free life, which means 20 years of incomeless life as well. Let's just say your expenses will be a conservative 5,000 per month for 20 years. Remember, this is also your healthcare, your unpaid mortgage, and also your child expenses. You will need around 1.2 million ringgit, and this is not considering inflation. This means that your EPF needs to have 1.2 million at the minimum by the time you retire. Now, besides this, when you retire after working so hard, I am sure you want to enjoy the best years of your life. You want to go travel. And to be able to travel and enjoy your old age, you will definitely need additional funds. This question is more commonly asked by newly married couples and those who just have their firstborn. Their child is still young, too early for education planning. But are you going to be financially ready when your child is ready to pursue higher education? As shown earlier, overseas education will cost 500,000 ringgit in 10 years' time, not considering the other costs which will come up to around ₦1,000,000. Even local universities degree will cost about 200,000 ringgit. But don't you think that we can relieve that burden if we plan early? Some investors in their 20s and 30s tells me that they are too young to worry about retirement. They want to enjoy the best years of their life. Yes, that is the advantage of being young. But if you are 25 years old now and start an investment plan of 200 ringgit per month only, you will be able to add 300,000 ringgit to your retirement fund when you retire. Now, that is enough for around the world travel. In short, the earlier you start, the easier the climb and the more you will gain. And what I mean by climb can be shown by this graph over here. This is a graph of 4 persons investing in the same investment vehicle at different times of their life. One from 25, 35, 45 and 55 years old. From the graph you can see that the earlier you start, the easier the climb will be and the bigger your gain. Like I mentioned earlier, I am going to show you why you should start as soon as possible. Let's look at this story of two savers, Saver A and Saver B. Saver A only begins investing at age 26 with a monthly contribution of 150 ringgit a month. By age 65, he has contributed 72,000 ringgit in 40 years, while getting a return of 1.7 million by age 65. That's really impressive. But Saver B started investing early in his life at 18 years old, with the same monthly contribution of 150 ringgit a month, and only until the age of 26 years old. So Saver B has invested for 7 years with a total contribution of 14,000 ringgit. But his return is 2.2 million ringgit by the age of 65. Saver B has outpaced Saver A by 400 over 1,000 just because he started investing early. This is the power of compounding interest. Some investors tell me that they have fixed deposit and they are happy with it. Very good, you have already started your retirement planning. But we all want to beat the inflation. Our investment returns must be higher than the inflation rate so that our money does not lose value. An average FD rate is around 3% per annum, while the average inflation rate is around 5% per annum. This means that your investment could be making a negative return instead. Now of course, all these are just a guide. Everybody's need and requirement is different, but we can tailor-make your planning to suit you. If you really want a detailed and individualized retirement planning or child education planning, you can give me a call and I will set up an appointment with you. Now we have come to the end of this presentation. I do wish that I have all the answers to your questions, but if until now all your initial doubts and questions about investing with unit trust have been answered, then this investment product could be the solution to the problems that you will be facing or having. So what can you do now? Start now. Take action now and make your first step, so that you can reap the benefits later. You can set up an appointment with me. And like the father of time management, Benjamin Franklin once said, failing to plan is planning to fail. Thank you for giving me 20 minutes of your time. If you need more information, do call me or SMS me or even email me. I will try my best to answer all your doubts and questions. Feel free to meet up with me and ask me anything. Again, no cost needed at all. My phone number and my email is written below. And if you have benefited from this video, feel free to share this free educational VCD with your family, relatives, neighbors and friends. Spread the awareness, help them plan a better future for themselves. Thank you very much for your time, and I hope you will have an incredible investing journey.